welcome to PM Express Business Edition. Well, today we are not coming to you from Ghana, but rather in Washington, D.C., USA, on the back of the just ended annual IMF spring meetings in Washington, D.C. And indeed, this is a special edition because we have a three-part show when it comes to PM Express Business Edition. The first one has to do with the governor of the Bank of Ghana, Dr. Johnson Isiama, as he speaks about the cedi and our results and what is the Bank of Ghana doing to firmly stabilize the Ghana cedi. And then we hear from Setekpe. He is an economic advisor to the president about the IMF program and how do we keep the program on track. And we get a view of the former chairman of Parliament Finance Committee about the economy, the Ghana cedi, and how do we sustain this. This is our special edition of PM Express Business Edition in three parts. Let's first watch the governor of the Bank of Ghana, Dr. Johnson Isiama. Welcome to our special coverage of the annual IMF spring meetings in Washington, D.C., that is United States of America. And our special coverage, we are indeed privileged to have the governor of the Bank of Ghana, Dr. Johnson Isiama. Doc, I appreciate your time so much, and even though quite a tight schedule, you've been able to make time for it. For you, the meeting is rounding up. How would you describe the meeting so far for you as a governor of the central bank?
I know the meeting has been quite successful. Remember, it all started from Accra. At the conclusion of the staff, level, visit, where we managed to attain a staff level, agreement. We continued, to Washington, D.C. We've had a couple of meetings again just to tie up the loose ends. And I can tell you that it is looking good. We are making progress. It's all about restoring macroeconomic stability. It is like a public good. It's something that is good for everyone. And we are quite happy with the progress we've made so far.
You spoke about the fourth review, and one critical thing that came out of this fourth review was the fund's comment about what the Bank of Ghana has done so far, building up some strong reserves. I mean, let me first get your initial commentary on this comment, more of a stamp of approval by the fund, and even the fact that you've actually met the reserve accumulation even before the program ends.
Way ahead of time, way ahead of
time.
How
does the bank take this?
Well, it's been broad-based. Remember a number of things. The external sector has been quite strong, admittedly, in the last couple of years. We've seen some strength, further strengthening there as well. Remittances has been doing very well. Gold. Gold is the new kid on the block. Gold inflows have been doing very, very well. And also don't forget cocoa. Cocoa inflows have also been doing quite well. And so on the whole, and when it comes to coordination as well, if you see the way the fiscal has been, has been running so far, that has been supportive, as well. So it's all about discipline. It's all about a strong, external sector. That is what you are seeing on the cedi. Going forward, we think that we have enough reserves, to be able to preserve the stability. But I must be quick to add that we are not, going to operate a fixed exchange rate regime. The cedi is an endogenous variable. It has to be, allowed, to float. It can go up, it can come down. Our, focus is to ensure that it is not excessive when it comes to its volatility. And so we are aware of trends this week. We are monitoring, issues. We believe that the market is resetting. We believe that expectations are being re-anchored. And so we are on top of the game. We are observing it by the minute, and we'll look at it,
Doc, do you think that the market is responding to the good news coming from the fourth review, the reserve accumulation? Because the cedi has seen some strong rallying, even going into this week as well. I know you are already aware. What do you make of this development?
Absolutely. So that's why I said it's a broad-based of factors. The staff level agreement, it was like a seal of approval that yes, we are restoring macroeconomic stability, we are doing the right things. And then the fact that, of course, don't also forget that the dollar itself, is weakening as well. But then the external sector has been strong. Those inflows have been doing pretty well. Gold is doing so well now. Our prayer is that the trend continues. But what I can tell you is that the days of excessive volatility in the city, it's coming to an end. Macroeconomic stability is a public good. What we have on our hands still is the fight against inflation. But so long as the city is, strengthening, then it also makes it easier for us to control inflation going forward.
Doc, the economists always say that all other things being equal, we are hoping that we don't have any blips and there's no strong demand ahead that would force you to deplete the reserves. But again, going forward, what's the assurance I have for you that George will be very disciplined with these reserves so that we can maintain this confidence in the long stretch?
So we have a projected cash flow, when it comes to the foreign exchange demands going forward. So we have a good idea of payments that would have to be made, probably 2 years from now. So we project all these. We don't just wait until there's a demand before we act. So we have it all figured out, and we think that the current levels of reserves we have should be able to carry us through, through at least a couple of years, coming ahead. And also remember, the fund program brings about its own dividends, because now there's renewed confidence in the economy. You can see lots more of, foreign investors coming in. People are now asking about bonds once again. That is exciting. Inflows will pick up, and then you see it in terms of, movements in the city.
So do I get assurance from you also that you're going to be active on the market about sustaining the city's current stability? I stand to be educated. You have been in this area for quite a long while, and this is not to flatter you or anything. For a long time, I never saw the city, and running even from last year to now, where the city was firmly stable against the US dollar. For you, what surety again would you give people out there that, listen, you are committed to these programs and policy measures that going forward, we see the city being firmly, at least stable. If you need the blips, it's normal. But
so the stability you are seeing now is not because we are intervening in the market. It's not because we are selling reserves for stability. No. Remember, our reserves program is actually going up, by the day. We are building more and more reserves. All that we are doing is strengthening, the surge in inflows. A number of foreign exchange market reforms are being implemented. It is the combination of all these factors that you are seeing. And so long as we hold that anchor, we'll continue to see stability. And I made the point earlier that when we say stability, it doesn't mean the city has to be fixed. It doesn't mean that the city has to over-appreciate, because that in itself is not good for our exports. So in real terms, we are observing the trends. We want to make sure that the city is not misaligned in real terms. It stays within some kind of band, a sort of range that is appropriate, a sort of range that is consistent with macroeconomic stability. So that is what we'll be looking at. But all I can tell you at this point is the days of excessive volatility of the city is certainly coming to an end.
Dr. Fan was, and even the MD at the press conference, he was making an argument that let's not be so much fixated about growth, but also we should look at how we can check inflation, and even pushing recommendations forward about maybe further hikes will be needed as well. In terms of the inflation outlook, is the Bank of Ghana firmly on the ground in terms of checking the situation?
Why do we believe so? A number of things. Look at what is happening to the city. Look at the policy action that was taken at the last MPC. And then also look at what the budget is doing, what the fiscal is doing currently. That should help to tackle food inflation. So a combination of these should be able to deliver on lower inflation, going forward. The next MPC is just about, coming in, starting somewhere around the 22nd of May. We are beginning to prepare, our data, going into the next MPC. We will take the right decision when those meetings also start.
Doc, your final words as you wrap up, engagement with investors, what did you get from them, and the assurance that you continue to manage the space tight to reinforce the confidence?
Well, it's all about confidence in an economy. That in itself drives investment. It drives foreign investment. And we believe that we're doing just that. You look at the fiscal measures, the anchors, that have been introduced into the budget now. Going forward, we believe that the fiscal should be able to hold itself tight, and because that's where it starts from. And we are seeing the picture from what the foreign investors are telling us. We don't intend to depart from, this way of doing things. We intend to maintain this sound way of managing an economy. The stability has come to stay, which will also spur, growth and reduce inflation going forward. So yes, we will keep our eyes on the wheel going forward. We hope that we'll be able to complete the farm program, on schedule, and then we will move to better things after that.
Doc, I appreciate your time.
Thank you. Thank you very much.
We'll come back again, Doc.
Thank you. Anytime.
And you had the Governor of the Bank of Ghana, Dr. Johnson Isiema, sharing his thoughts on the Ghana cedi reserves and the IMF program. Let's hear now from Setekpe, former Minister of Finance, Economic Advisor to President John Mahama on the economy, the cedi and the IMF program. Welcome to our coverage of the annual IMF spring meetings, and also welcome to PM Express Business Edition as you talk about the economy and the IMF program. Yes, of course, the IMF program or the IMF meetings have ended in Washington, D.C., but discussions about Ghana's program and the economy would not go away. And therefore, that is why on today's edition, we are engaging the economic advisor to the President, Setekpe, to get his thoughts on the economy and also how the program is going, and also how do we ensure that we keep on track. And thank you so much, Honorable Setekpe, Economic Advisor to the President and also a former Minister of Finance. So let me first get your thoughts. How would you describe this meeting? I've seen you in some of the meetings as well, per the pictures I saw. How would you describe these meetings?
Yeah, thank you very much. The meetings, there are two major meetings of the IMF involving all of its member countries. That's the spring meetings, which is the smaller of the two, and the annual meetings, which takes place in October, at which the IMF, has to account more formally and in a very significant way, to the member countries about its performance, both on its operations and on its finances. But from the perspective of Ghana, there are two aspects to this delegation coming to the spring meetings. As you said in your introduction, Ghana is in an IMF program, and the fourth review was just concluded in Ghana ahead of the delegation arriving in Washington. Obviously, one of the things that happens is that the officials of the IMF, including the managing director, makes time to meet, and heads of department make time to meet, as many delegations, if not all delegations, including they are led by often, the directors, to engage them on specific country issues before the more general issue, which is the second aspect. In our case, because the fourth review was just concluded in Accra, and we were fortunate, in any case, more positively, having a staff level agreement, which means that the staff had agreed in principle that the program, was on track. It stands to reason that coming here, further discussions will be held with respect to preparations being made to go to the IMF board, where the fourth review will be approved. Tentatively, we know it's in June. The country delegation and the staff mission, from the IMF that came, would also take the opportunity to iron out, a few technical details, some of which we may not have given them complete information, but, promise to update wise at the spring meetings. So these, these are the two, elements which are very important, for Ghana: participation in the spring meetings as a member country, but also a bit more focus on ensuring, led by the minister and the governor, that all is well, all is moving well, to go to the board and to get approval for the fourth review, which will come with some resources. I think in this context, one can say that the IMF continues to be satisfied, with the progress that has been made since the Mahama administration, came to, power. And within a short period, following the economic dialogue, as well, of course, the transition started, and then the economic dialogue, the SONA, and then the budget. I think one can get a sense that the fund is, fairly assured, that the remaining issues will be ironed out, and we would go to the board and hopefully go through, the board agreeing, to the recommendations made in the fourth review.
No, but there are some who are worried about possible complacency setting in, and the fact that you've had the fund give you a thumbs up, you're on track. You have BMD in the meeting again, praised Ghana, but the progress that you made. How do we guard against complacency? Because that's the fear, that having all these thumbs up, things are kind of going well for the government. If you want to describe that as honeymoon, maybe it's for another debate altogether. But that is where the fear is. And how do we make sure that we stick to the books and not get off track?
Well, I don't know if it is complacency per se, but I know that the President Mahama's administration is not complacent. In the first place, this is an administration which, has both as president and vice president, and now into the second, tenure of the president, has been involved in IMF programs, also as a parliamentarian, as a minister. So I think there's some familiarity with the president, and his team to know, when things are going well or they are not going well. Secondly, the IMF is very rigorous, and IMF is not looking at the Mahama administration per se. The IMF is looking at the sovereign, meeting its commitments. Once you take over an IMF program, once you make it overlap an election, as happened in 2016, I think it stands to reason that is a sovereign that is facing, the IMF. And I think the MD and others are echoing, what, they believe has been done. And if the fund staff mission had any reservations, including the country office, of course you wouldn't have 100%, which is why sometimes you have waivers and the rest. But we are hopeful that, the conditions will be met, maybe with some polishing of things that have to be done or the rest. So I am quite optimistic that this is based on the facts on the ground. And I think Ghanaians agree generally, that the country has made a very strong, start since President Mahama, came into power with his team. So we do have other reviews ahead. We do have other, conditions to be met, and we have been quite plain with the conditions, in the economy. And I don't think that anybody takes, events like a default, lightly. So yes, I don't think the administration will be complacent. We would analyze where we are, and we would make, tangible progress to make sure that, Ghana gets out of the situation in which it finds itself. I'll be the default situation which I refer to, high levels of inflation, slow growth, and the other phenomena which we all know, has happened, in the immediate past.
Let's talk about the fiscal challenge. And I know the fund has given, again, government thumbs up in the area of the laws that you put in place in the budget. But some are saying that if it comes to law, Ghana has never found itself wanting when it comes to putting in place the right fiscal laws. The challenge has been with the strict enforcement. What do you tell those who would argue that listen, we've put in place the laws, which has seen the fund gives a thumbs up and pass the fourth review. But the real challenge is about the enforcement, the overruns, the contractors, the commitment and the arrears arguments, which I know will come up. That is where the real challenge is.
Well, what you call the real challenges, incidentally, are precisely what the fund mission came to review. You know, the huge arrears, the debt situation with the harms. You know, if we talk about the harms, we mean major commitments that are going to face, you know, the country. When do we go resume the domestic debt, you know, markets to enable us borrow on longer terms, 3 to 5 years? We're getting to 7 years and possibly even 10 years, particularly for capital expenditure, for projects. You don't borrow for 3 months, as we are doing now, you know, with the treasury bills, basically. Treasury bills means 91 days, 3 months. You couldn't complete a project, most projects, in 3 months, if at all. So you borrow 3 months to bridge, you know, for temporary bridges when revenue is not adequate. So, first of all, my immediate response is the very things you set aside as the most important challenges that are going to face the country were indeed the issues that were facing the country. They were the issues on which the IMF program was formulated, and they were the issues on which the staff mission came and gave the compliments that significant progress was made. Remember that this was the fourth review, right? And so that means that there had been a first, second, and third review, you know, following the approval of the project itself. So the administration is not going to be complacent, that I can assure you. The administration has mapped out what it intends to do, and the administration is showing, you know, that there is some progress that is taking place. So that is the element, you know, of, I don't think it's a soft targets that have been set. Remember, we are meeting the same conditions that were met, you know, and there was some apprehension, actually, you know, that Ghana may not be able to meet all of the conditions. If I heard the mission when they came, you know, yes. And so it's against the backdrop that within a period of 3 months, you know, the Mahama administration has been able to surmount all those challenges, done deep, you know, dive into expenditure, you know, and some revenue, and brought the deficit, the primary balance, both the primary balance and the fiscal balance, within range of the targets. If this were the case, we would have known by December, right? So there is some tangible progress that has been made, considering that it is now that the fund itself is acknowledging, you know, that significant progress has been made. It means that something else has happened in the last 3 months. And let me say that, as I said, the president and his team do not lack the experience, you know, in going into a fund program. You know, this is a government that started, you know, with Emerson Mahama after President, you know, Rawlings, if you were to take out, you know, the two competing administrations. And so, and the fund has dealt with, in fact, most of the people who were seated around the table in the African department in particular were people who had dealt with Ghana for a very long time. So while saying there won't be complacency, we do acknowledge that there is a lot of work that has to be done.
And I get the assurance from you is that in terms of fiscal discipline, in terms of checking the overruns, in terms of those challenges that caused the program to derail a little bit, we would not see that this year and going into next year.
I think the numbers spoke for itself, right? So let me take 3 examples. Why did we default? We were not paying, right? We met one of such big challenges by going into reforms that we were implementing previously, you know, which is setting money aside through the stabilization fund and the sinking fund to meet those commitments. Within a short period of time, we built up, you know, the necessary reserves that were needed. You know, one would have thought it would go into consumption, it would go into some other, but no, the sacrifice was made, just as we had made in the past, if you remember, you know, to take off the first sovereign board substantially before the MPP administration took off the balance, right? So I think we are talking about things, which the staff are acknowledging based on facts. We know the arrears. We know there were huge arrears. What the government promised was an audit. It's underway, right? But nonetheless, some payments have started, particularly with the energy sector, debt. And these are the things which, the IMF team, all the way up to the managing director, was acknowledging. They knew the program, and I don't think that they would, have made us complacent if they didn't think that there was some substantive, progress that has been made. Of course, the caution is that Ghana should avoid, the hiccups that come with starting, well, and then change of administrations often lead to, other derailment of programs, so that we can make a progress. If you were there, you heard the sentiment that Ghana should be leading, in the economic maturity of the continent. And I think that is something which we all as Ghanaians must acknowledge, that Ghana is held in high esteem when it comes to African matters, and it's up to us to live up to that expectation.
And you are quite convinced that come June, we will be able to, the staff can go to the board and tell them that whatever things that we thought Ghana should do, they've done that, and therefore they should approve the $370 million for Ghana?
I'm quite optimistic, because the first hurdle, to buttress the point, the first hurdle is agreeing with the staff. They are the technical staff. That, and they go through the numbers. You can see that they come into town minimum of 2 weeks, and they go through the numbers. They go to Bank of Ghana, they go to Ministry of Finance, they go to Statistical Service, they verify the numbers. They have backstopping, what we call backstopping, back in Washington, which is also looking at the numbers at the African Department and other departments like the Fiscal Affairs Department, and confirming to the staff in the field that yes, some progress is being made. So they wouldn't have come, to say there was progress if, of course, there wasn't, progress, being made. You spoke about the laws, the laws. We are talking about the difference. The one big difference is the Public Financial Management Act, PFMA. Remember that law was passed, by the Mahama administration, the last Mahama administration. Let's say it is a revision of the Financial Administration Act, which was, outmoded, like many laws. Now, the two elements that we are talking about here is the Fiscal Council, and the assurance that when you establish a Fiscal Council, they would bite. That's a concern of the fund, because we had a Fiscal Council. Okay, so what has been done now is to put it in the law in very specific terms, that there will be a Fiscal Council. It looked like something which the executive had to do, but now it's in the law, that it had to be set up. Then, of course, I mentioned measures like the PRMA, the Petroleum Revenue Management Act, which we ourselves passed and said we would devote partially to settle debts, which we didn't do. That itself has also, been saved. I mentioned energy. So, in actual fact, these are substantive issues, which were coming up, for discussion. And I think we should be assured. We should be assured that, some work. The assessment, let's say the assessment, will be convincing to the board, to allow the board to approve the fourth review, and then we move on, fifth and last review, and then it will be up to beyond that. It will be up to whether or not we could have a homegrown policy, right, so that going back to the fund most of times. It's okay to go to the fund. Countries have what we call the policy support instrument, which is, because the IMF will always have oversight based on Article 4, right? Article 4, so can we use that as an assessment when Article 4 is done to assess our own homegrown policy on a continuous basis, on a regular basis? For example, you could put in a clause, which says that our debt should not exceed 65%.
But I don't know, the reality is that capping debt has shown us, even when you come to Bank of Ghana borrowing, may not be a prudent thing to do.
We achieved it before. That's the point I'm making. The Mahama administration ended at 57% against great odds and against a lot of sacrifice, remember. Because if you are going to control debt, it requires a sacrifice. Because you've borrowed, right, to meet the budget deficit. You have borrowed for construction, right? You must either make sure that the projects like the airport, Terminal 3, projects like the Chabo processing plant, the revenue is being generated. Remember this, the Chabo plant and the energy sector was to be part of the waterfall. Why did it collapse? That is the point, right? But these were things which are not new to the current administration. In actual fact, the waterfall mechanism was put in place by the past Mahama administration. The debt repayment account, which was stopped and for which we were, we had to go into a default, was started by the Mahama administration. So I'm saying these are not things that are alien. The caution, again, let me repeat, coming from the fund is that Ghana should endeavor beyond these bipartisan political, differences to let the programs sustain when the program is working, in order that, we can leapfrog into where some African countries now, the emerging economies and the others have gone to.
When we come back, we're looking at how do we sustain the confidence. Already we've seen the cedi and what has happened to the Ghana cedi. Also, the issue about taxes has come back again, and the IMF MD in her press conference raised the issue about we need to do more in the area of domestic revenue mobilization, and also the bit about, as I spoke about, the bit about the confidence and sustaining this going for. This is PM Express Business Edition, engaging the economic advisor to the President, Honorable Tekpe, about the IMF program, the economy, and sustaining the confidence going forward. We'll be right back after 2 PM Express Business Edition, coming to you live from Washington, D.C., USA, as you talk about the economy and Ghana's program with the IMF. Indeed, I'm engaging the economic advisor to the President, Honorable Tekpe, and he's also a former Minister of Finance, having had some stint with the International Monetary Fund, as we discuss the fund program, the economy, and also how do you sustain confidence going ahead. Honorable, thank you so much for your time, and I really appreciate it so much. There's another bit where the fund is still worried about domestic revenue mobilization. The fund thinks that you are still not doing much in this area. It comes to the challenge of reforming the tax laws, being aggressive, or some would say hiking the rates.
Well, thank you very much. On this matter, we actually did revamp all the tax laws. Of course, it's about a decade. So normally what happens is that typically between 8 to 10 years, some say even 5 to, you should be reviewing your laws. I think some of the revisions that we did to the Income Tax Act, to the VAT Act, has affected revenue mobilization, particularly the VAT Act, to the extent that the IMF is now going to field, a whole mission to come and look at our VAT Act again. That will be the third major review of a VAT law. It is not the way to run laws. The first one was when the introduction of the VAT itself failed, and we had to reintroduce the VAT. Excuse me. The second one, was in 2013, I believe, when we decided to revamp all the revenue laws from income tax. We even created an excise act, and the new VAT Act came on. Then, of course, we came in with levies, so many levies, many of which were actually part of the taxes that the VAT replaced. And now to the point where they have encouraged evasion and avoidance so much, that we need to strengthen the laws. And mind you, there's a fiscal aspect which affects revenue. We have seen the phenomenon of containers and others being moved out of the port, right? Customs must come to mind. And if the goods, were no cables, or if the electricity company cable saga, were also to be happening on the, let's say, importation, private importations and other importations, it meant that we are losing revenue. All right, there may be an exemption for cable, it may not generate revenue by virtue of they being used for social purposes and the rest. But if containers are able to move out of the port in those numbers and at those values, is it possible that goods on which, customs duties should have been paid, import VAT could have been paid, import excise could have been paid, is it possible that they are going out? So, you see, the analysis is going beyond just the fact that it's affecting electricity corporation, and when I spoke to the Commissioner General, he said, Honorable Tekwe, we are looking at all aspects, of this incident to make sure that, it is not affecting not just our fiscal operations, but, revenue as well. So the caution from the fund is to allow the laws, to operate. Okay. And at the risk of repeating myself, let me say that much of the requirements, much of what we are being told to do to sustain the program are not new, right? The key revenue part, the two key revenue parts are the VAT, which I said, I think you may have heard during the meeting when you were around, that there was a mission already that had visited Accra. That's how fast this issue was taken seriously. We were told that the mission is reviewing, the report at headquarters, and another mission, this time from the legal department of the IMF, which help us, would move quickly, to help us rewrite the VAT Act. I would hope that we'll let the Act remain, because the thing about VAT is that businesses must be allowed to take the taxes to offset the taxes they pay on their input, the VAT they pay on their input against the VAT that they charge, when ultimately the consumer has to pay. If not, then it goes into the cost, of operations. So there's a legal aspect, and then the other aspect is the automation. You recall that again. This is not new to us. You recall that the creation of GRA with the Ghana Revenue Authority to replace the Revenue Agencies Governing Board. You recall the merger of IRS, and VAT service, right, to form the Domestic Tax Division. Let me just end with these two. Now, when you merge VAT and you merge income tax, there are staff who were doing only income tax. There are staff who were doing only VAT. You need to retrain them, because now they are going to be handling, both tasks. You also need to look at the offices. There were separate VAT offices, domestic offices. There were separate, income tax offices. You need to merge them. The mergers took place. The question is whether, one, the staff have been adequately trained for all these years on both sides. I'm not inferring that the training was not done, but was it sufficient to make the tax robust? So in addition to affecting the structure, the changes in the structure of the law, I don't think that the merger was completed, because if it was completed, we wouldn't have a condition in the IMF program which says that we should introduce the integrated, domestic tax administration system. Right? Because if you had only a VAT system, and the income tax system was weak, we all knew. You need one that will replace both, right? And strengthen compliance, and administration. How does this strengthen compliance in particular? You see, because we are an import-dependent country, excuse me, because we import most of what we consume, we import most raw materials, we import most equipment. When the goods come from overseas and land at the port, the VAT must be collected on it. But at that point, it's not consumption. VAT is a consumption tax. So when the businessman who pays the import VAT at the port uses those goods to produce goods or sells them, right? If it's raw material, they use it. Okay. They must be allowed to offset what they paid at customs against the domestic. Customs is sitting electronically through ICOMS on all this information, which, because there is no integrated domestic tax system, first, they cannot use the customs to check malfeasance, to check whether somebody is oversetting the tax they paid at the port, is not doing the right declaration. We also miss the opportunity of using even the VAT information, right, to check your level of income and expenditure, which now we have moved from VAT into corporate income.
Honorable, my argument is that you have been in this space for quite a long time. That what is our struggles? What is our challenge? That maybe because we are under a fund program, now the fund has to come in to help us even restructure our VAT laws and our VAT programs and to collect more. I mean, some would say that isn't it an indictment on the country Ghana, the company Ghana?
It certainly is an indictment, because remember in our last segment we said that the fund was urging us to sustain our reforms, right? To sustain our reforms. It's not always that we do not know what to do.
But that's what they come across.
Yes, no, it is that we do and then undo, and we have to do again. The same thing, right? So whether this is bipartisan, whether this is the fund is saying, it's about time we let the tax laws, it's about time we let the reforms we made, it's about time all the things that we've been talking about, right? Let them sustain them, and it's only then that you gain experience, in implementing them, and that will bring the domestic, revenue mobilization. Secondly, the fund is saying, to us, that the admonition which we are talking about is what I'm referring to, right? It's telling us that, we have gotten our tax systems, our expenditure systems and the rest above many African countries, right? And this back and forth, it's not helping, So I think the message being sent across is that we get things right, but we don't maintain them, we don't sustain them. I think that's the message that was.
But let's come to one thing that is happening, and we don't know whether we can blame it on the performance of the dollar itself on the international market, but some are also linking it to the fourth review. The dollar has seen some strong rallying just over the past week. The argument that there's a fiscal component to this whole performance about the Ghana cedi. From the fiscal side, what is the assurance do I get from you and the minister and the president itself to keep your eyes on the ball, that the overruns and those other things would not derail what we are seeing right now with the Ghana cedi?
Well, the dollar has had a difficulty, that's for sure. This is something which the governor was talking and explaining, right? But then, excuse me, there has been certain phenomena which has also affected the dollar. For example, if you are not collecting enough revenue, or if you are not promoting your domestic industries very well with good policies, you end up importing all the time, and you'll be depleting your reserves, in doing that. But there are other fiscal reforms. The hints of stopping, the haphazard way in which, gold was being handled, from, the mining of the gold itself to its marketing, right, has brought some expectation that things will be moving in the right direction. And I believe I heard the governor talk about, since the measures on gold were announced and actions being taken, the reserves, coming from gold, has been, has started increasing. So we need to, but again, we need to generate forex in very sustainable ways by supporting exports, right? And this is where institutions like the Exim Bank come in, to be able to give loans, to local businesses so that they will be able, to export. And when they export, they earn, forex.
But I am coming to the fiscal discipline bit, because there are some who are saying that there's always a fiscal component, and so what commitment do we get from the executive, your advisory, that the president himself, the Minister of Finance, the fiscals, to ensure that at least we sustain this good run that we've seen since the last quarter of last year to even now?
The president yes, receives advice, but the president is familiar, very much familiar, with most of the admonitions which Ghana is receiving. I say so because let's remember that this is the president who sanctioned putting money aside, even at dire moments, for us to be able to pay our debt. If you don't pay your debt, it's fiscal. It will come to haunt you. It's even social. Your Ghanaians will suffer haircuts, right? As they did, because you were not able to pay, and you don't expect foreigners alone to do the sacrifice. So Ghanaians will have to do the sacrifice. I just spoke at length on the need for us to automate the system, continue with, the reforms, and then of course, there is the expenditure element, which involves auditing, the minister spoke about commencement certificates, a commencement system beyond just certificates, which will be verification, and to ensure that before, when we say commencement, it means being given the fiat to commence a project, particularly the major ones. That's what we mean. Making sure that the ministry that is going to embark on that project has enough commitments, enough provisions in the budget, before embarking on the project. Otherwise, you will end up, starting a project, as we have, with so many at different stages of completion, right? So these are the things which, again, we need to pay attention to. And again, they are not new. These are areas in which, for example, we strengthened the gift mix. Later we heard about how expenditure was going behind the gift mix, were not being recorded. These are the things for which we were being admonished to allow, reforms to work.
Finally, Honorable, as you try and wrap this interview up, the bit about also the confidence, the signaling. I know there was an investor engagement. It has sent some signals across the investor market about government's commitment to fiscal discipline. How do we also manage this renewed confidence in the economy so that things do not get up? As you wrap up on this discussion, Honorable.
By doing things right. First of all, when you talk about investors, the type of investors we are talking about are people who give us money. Many of them do not give the money because they are coming to set up businesses, right? They come and buy our bonds, right? That's a non-residence. They come and buy our bonds, or they provide money to buy our sovereign bonds, which we then come and use to do developments, to do projects, right? Your ability to continue doing projects depends on patronizing these sources of financiers who are buying your bonds, because, every country borrows to do projects, right? But for heaven's sake, what they're saying is, when we give you the money and you promise to pay in, by the way, not just the foreigners, most of those who we met were foreigners, but including our own domestic pensioners and the rest. When we give you the money, right, the hard-earned pension, the hard-earned savings, and you promise that in 3 months' time, right, you would pay me back, which is a treasury bill. Let it be my prerogative to decide to keep the money with you. Don't default in paying. When we give you money, maybe I have substantial money or some windfall, which I want to invest for my children. I want to deny myself now. So I put in a 3-year bond. Why 3 years? 3 years maybe when someone in SS1 will be what? Going to school, completing, right? Or somebody in elementary school will complete it. There are reasons why people save. Or even to marry, right? When that time comes that I need the money, don't tell me, I don't have the money to pay you. That is a default. These are the meaning of default. And this is where the investors are coming from and saying that countries borrow, but the countries that do well have mechanisms for paying. My word is my bond. That's where, the word bond comes from. My word is my promise, to pay you back. So, the investors, seem to be optimistic, as you put it, because many of them, remember, at the time they gave us those monies, the sovereign bond, the domestic bonds, we didn't used to exist, and the rest, right? That was when we were also putting measures in place to make sure that we don't go hippie, to make sure that we do not default, right? And so that is the vision, that's the promise. And I would hope that, or expect rather that, we would implement some of the measures that we're bringing, the confidence back in the economy. You mentioned the Fiscal Council, that a council is a council, so that it is also the CIS changes to SEL counseling, so we can take all these seriously. And this is what has always been ringing. Don't raise our hopes and then dash them again.
And that's how we draw the curtain down on PM Express Business Edition. It came to you live from Washington, D.C., just on the sidelines of the just ended IMF World Bank spring meetings in Washington, D.C., USA, as you looked at the Ghanaian economy and the fund program, and how do we ensure that we end on a good note. I know the debate will still go on in your homes and your offices about what can be done to firmly stabilize the economy. We'll be on track with the program and ensure that we indeed end on a good note. You heard the economic advisor to the President, Honorable Setekpe. This is PM Express from Washington, D.C., USA. Have a great day. You're welcome from the break. Let's now get the views of Honorable Patrick Boama. He is the former chair of Parliament Finance Committee and a member of Parliament as well, on the economy and the IMF program.
This whole IMF meetings and even the global economy and all the rest, and how things are shaping up and how the fund has given the assurance that they will assist Ghana if the request is made and all the rest. Let me quickly get your thoughts on that one, since we are all being covered under this annual meetings that we are all here.
Okay. Thank you very much, and George, for the opportunity. I think it's refreshing for the fund to have made that commitment to assist government with any request that it comes up with, provided it falls within the framework of the program. That is refreshing. We need our economy to grow at certain levels before we can actually feel the effects of all those macro and microeconomic indicators in our pockets. So it's refreshing, and I encourage government to come up with strategic programs that will be acceptable to the fund and the bank to be able to assist government. I know the fourth tranche of the arrangements that we have with the fund has been released.
Yeah, I mean we've passed the fourth review, going to the board for it to be released in June. Yeah,
it will be released. I believe so, and I hope it's going to affect our currency situation and bring some stability on the market, because if you are going to be receiving over $300 million, it adds up to your reserves and gives some assurance to the business community about currency stabilization and what have you.
Honorable, you've spoken about the currency. Already we've seen over the past 2 days, we've seen some big rallying of the currency. If you look at the Bloomberg platform and even the commercial banks read. I mean, knowing where you're coming from, your background and all the rest, for you, what should be done by those who are managing the monetary space to sustain the gains that we are seeing with the local currency?
For me, as a lawyer and somebody who is a student in this area, I think it's about confidence that the managers of the economy bring to bear on the financial market and space, and to the investor community, that affects their projections into how their currency is going to perform. Secondly, there are a lot of arrears on the books of government that ought to be paid. But the investors, you and I know, are aware of this, and they are asking questions as to the effect of those payments on the city. For example, if you have about 18 billion cedis on the books of government, what will be the net effect if government starts paying? Because I know for a fact that government has not been paying some of these areas over the last 6 months. And if you look at the quantum on the books of government, like I said, what will be the effect of those releases on the currency's depreciation? You must look at that, and I believe the investors are also looking at it. So it's early days. I saw the CD to the dollar around 14.9.
Yeah. From coming from the 15 range 15. Over last week, yeah.
Yes, it means something has happened that we need to investigate, whether it's artificial or whether it's through some ingenuity from the governor's end or the finance ministry.
So don't forget that the dollar on the global market is also struggling as well, so that could also be a contributing factor.
It's a contributory factor. Secondly, this issue of tariff war that is going on. You could tell that if importers are not arranging for the needed dollar from the central bank, it will also ease some pressure on the bank. That will also affect the depreciation of the cedi. So let's watch the space. If all these tariff issues are resolved, I believe the Chinese and Americans are doing their thing. And if government decides to start paying arrears owed contractors, service providers, and what have you, then we can easily assess whether government has done something technically right to ensure that the city is stabilized.
So you feel that it's a brief relief, but
I believe so.
Let's watch the space and see how government would also manage the servicing of these debt and the end impact on the local currency.
You see, depreciation affects the overall GDP or the debt stock of government. At the last review, we realized that the debt to GDP ratio was confirmed by the World Bank and the IMF to be about 61.8%. They also confirmed the growth rate of the economy as of December 2024 to be about 5.7%. They are now telling us that the projections in our budget of about 4.4% growth rate is being revised to about 3.9%. I believe they have also factored into their projections some of these issues that we are talking about. Because if you haven't paid contractors, if the arrear sitting on your books is about 18 billion Ghana cedis or so, receipts that are pending at the Controller and Accountant General's office and what have you. So if they do a net effect of all these releases, coupled with the happenings on the global economy, the struggling dollar and the tariff war that is going on, and the issues within the country as a whole, then it takes you, or a reasonable person, to say that, look, this is a brief respite for the city. Let's see how it performs within the next 6 months. Thirdly, George, government is now beginning to implement some of the tax reforms that Parliament approved at the end of March. And I don't believe government has been able to accrue the needed revenue based on their projections within the fiscal table. So those are some of the factors that I want us to take a look at, assessing how strong the city has performed over the last.
And whether the current trend can be sustained, actually.
We live to see.
Oh no, but I want to come back. I know you're on the Foreign Affairs Committee, and I don't know whether the Trade and the Finance Committee will also be working with you. There's this push for us to engage the U.S. government on extension of AGOA and see how we can mitigate these tariff shocks on the Ghanaian economy. I don't know whether it has come to your level, and at the committee level, what you will also be pushing to use the diplomatic channels to try and see whether we can get the AGOA extended, and also see whether these tariff things can be reviewed for Ghana. No matter how little out on Ghana, the indirect impact could be worth for the economy, some will say.
Thank you very much. You see, there are companies who purposefully set up to benefit under AGOA. Madam Salma's company, Unity, they are into garment and textiles and what have you, at the UTC, some are the free zones enclave. If we don't push for an extension, it will lead to a lot of job losses and revenue shortfalls for government. So I believe that one, we must push for an extension of the AGWA and to be able to capitalize on its benefits. Secondly, with the tariff wars going on, you need to also encourage the local business community to increase their export potential by giving them the right or the needed incentives. You see, we cannot sit and be spoon-fed for a long time. We need to win ourselves.
Explore new market,
some of these policies, because if the U.S. is giving you an opportunity under the African Growth and Opportunities Act, which has been in place for more than close to 20 years.
President Kufuor's time.
Yes, around 2003, thereabout. Then you need to ask yourself, what have you been able to do in the area of AGWA to expand your export potential, to be able to rake in the FX or the Forex that is supposed to support the growth of your economy. So I believe an extension of AGWA is good, but it shouldn't be in perpetuity, so that we are able to build the kind of local industry that we require. That is why I was a firm believer in the One District, One Factory program, regardless of the challenges and the abuse of some of the entities. Because if we don't take steps as a country to build local capacity in the industry, the expected job creation that we've been talking about will be an illusion. Secondly, local pharmaceutical companies like Aquatic Life Sciences, NS Chemist, Amponsa Ifa, Tobinco and Co., they need to be encouraged to be producing within the local market to avoid the importation of some of these drugs onto our market. So there are strategic areas that government ought to look at in terms of textile export, in terms of pharmaceutical, in terms of import substitution, agro-based industry. I'm happy government is talking about agribusiness, but if you look at the budget lines for the Ministry of Trade and Ministry of Agriculture, you ask yourself,
they're insufficient.
They're very insufficient if you want to make a projection into hitting the big market with some of the targeted crops that you need to export to be able to generate the revenue that it requires. It means you have to be putting in a lot of money to support the agriculture.
Oh, no, but I was just trying to find out whether at the committee level you'll be pushing for these diplomatic channels in terms of the engagement so that we could, because I know the committee level you have engagement with diplomatic partners, and even you are here as well, whether we can be pushing that diplomatic channel to see the possible extension of the AGWA and even, let's say, minimizing the shocks as well.
When I was chair of the Foreign Affairs Committee, there was one thing I instituted, that at every bi-monthly, twice a month, I invited the ambassadors from some of the countries that Ghana had a lot of trade relations going on: China, the United States, the UK, Italy, and Nigeria, to discuss how we could improve upon our trade relationships with them. By so doing, you are able to profile suggestions or ideas to them, especially in such challenging times. And I will encourage the new chair and assist him into putting in place some of these programs so that it gives them an idea as to the Parliament of Ghana's perspective on our trade relationship with them. You'll be there and they'll report Ghana's trade surplus is this. We had a trade arrangement with China and exceeded $1 billion. How did we get there? Can't we do 10 billion? Can't we do 15 billion if some of these bottlenecks are removed? So these are some of the things that I'll be encouraging the committee to look at. This morning I even read that the U.S. is asking their nationals to be wary of 4 countries they'll be visiting in April, which included Ghana, Morocco, and I think Uganda and another country. Those are things that also impede on growth and trade relations that we ought to look at when some of these issues crop up. So it's a myriad of issues. One, continuous engagement with them. 2, identifying the bottlenecks within the trade arrangements that we have, because most of the time we have bilateral arrangements with them, but we need to continue and establish strong trading desks or bilateral desks with some of the very important trading hubs globally. And you can't do so without talking about the United States, where we are now. China, very big global power, I respect them so much for what they've done. We need to identify new economies
that we can explore.
Vietnam, what they are doing, and what we can learn from them. Far East, South Korea, and what have you. These are economies that appreciate where you are and could hold hands together and grow.
Honorable, let's talk about taxes. Let's talk about tax exemptions. And I know where you're coming from. The IMF Managing Director in a press conference spoke about the fact that we need to do more in the area of domestic revenue mobilization in these times. And she's saying that we have no excuse when it comes to taking a second look at tax exemptions and even the reliefs and all those things we offer. We need to raise more revenue locally. From where you are coming from and the work you've done in Parliament, the work you continue to do, let's first start on the bit about domestic revenue mobilization. What help is Parliament going to do, the laws and all the rest, to ensure that the Minister of Finance is able to raise the required revenue locally? Because the MFND is saying that looking at the global challenges, aid is going to go down significantly. People are not going to buy your stuff to give you the effects you want. Your next savior is raise more revenue locally.
I agree with the IMF and the fact that we no country develops without maximizing local revenue, because that's what they also generate, and you go and tap into it as loans and other grants. The big powers signaled to us, for example, America, when they started canceling some grants and aids to Africa. And if you want to talk about tax exemption, you need to also look at areas where an exemption of tax will lead to an exponential growth within the shortest possible time. I don't think the IMF was talking about a complete removal of tax exemption, but to be very strategic in areas. I've mentioned the pharmaceutical sector. I've mentioned the textile sector and other agro-processing areas where we need to be strategic to be able to give the needed tax exemption. But if you go to the free zones, you realize that we haven't been able to check the free zones operators, whether they are within the tax exemption brackets that we gave to them. I want to encourage government to look at that carefully, because I feel that if under the free zones policy, you're supposed to export 70% of what you produce and trade about 30% domestically. There could be some abuse there. And I will encourage government to reshuffle some of the arrangements of personnel within the area and not have too many permanent people assessing the books of some of the operators within the enclave.
And you believe that we should take a second look at these exemptions, because the argument that it's been abused and we are not using it well as a country?
George, when I was chair of Finance Committee, I wrote to the GRA to give me an idea, data of every company that is enjoying some tax relief. one way or the other, whether in the free zones, and I can share with you, it's voluminous, and I don't know the capacity of the GRA to be able to, line by line, assess whether they are doing the right thing with regards to the exemptions that they've been given. That is what we have to look at. Whether we have to modify it by giving them tax credits instead of exemption is another discussion. So I think we must take a second look
and review it as well.
And review our tax exemptions.
No, well, I appreciate your time so much, and thanks so much, and have a good day. It's been great talking to you, and we wish you all the best.
Thank you, George.